The era of the cash-burning EV startup? Officially dead. While Wall Street was sleeping, NIO just pulled off one of the most stunning financial reversals in automotive history. I'm Smart Stock Sam, and what I'm about to show you in this mega update could rewrite everything you thought you knew about this stock. We're talking about a company that burned nearly $800 million in a single quarter, and just 12 months later flipped that into pure profit. Analysts are now throwing out price targets that could triple your money, maybe more. But here's the kicker. Most investors have no idea this transformation even happened. So buckle up, because by the end of this video, you'll understand exactly why NIO stock is ready to absolutely explode. For a decade, NIO was trapped. High prices, low volume, and relentless cash burn. The company was stuck in what I call the niche trap, catering to premium buyers while bleeding money quarter after quarter. But something fundamental has changed. NIO isn't just tweaking their strategy. They've executed a complete industrial pivot that's rewriting the rules of EV profitability. The numbers tell an incredible story. Management is targeting over 326,000 deliveries this year. That's a jaw-dropping 47% increase year over year. But here's what makes this different from every other growth story you've heard. They're doing it while generating profit, not burning through cash reserves. The preliminary Q4 profit alert shows between $100 million and $172 million in adjusted earnings. Even on strict GAAP accounting standards, they're projecting up to $100 million in profit for a single quarter. So how did they pull this off? The answer is their new sub-brand Firefly, targeting vehicles under $20,000. But this isn't just another budget EV trying to compete on price. NIO did something brilliant here. They partnered with the Pegasus 3 film during China's Spring Festival, reaching over 100 million viewers. Instead of positioning Firefly as a cheap city car, they transformed it into a rally-inspired lifestyle choice for Gen Z and millennials. They killed the stigma of the budget electric vehicle before it even launched. Think about the psychology here. Traditional budget EVs are seen as fragile, boxy appliances. The perception is defensive. You're settling for less because you can't afford more. NIO flipped that narrative entirely. Firefly is positioned as rugged, adventurous, with rally DNA. It's an offensive purchase decision. You're not buying it because you have to. You're buying it because it represents who you are. This lifestyle branding is the secret sauce that drives the massive volumes needed to reach break-even and beyond. Let's talk about the financial inflection point, because this is where things get really interesting. In Q4 of 2024, NIO lost nearly $800 million. Fast forward just 1 year to Q4 2025, and that massive red bar has completely flipped into solid green profit. This reversal was driven by ruthless margin optimization and that 47% delivery increase we mentioned earlier. Now, you'd think with results this dramatic, Wall Street would be in complete agreement, right? Actually, analyst sentiment is fractured, and that's exactly where opportunity lives. Barclays remains underweight with a $4 price target, waiting for more gap consistency. UBS is neutral, but Citigroup, they're screaming buy with a $6.90 target. Macquarie has an outperform rating at $6.10, talking about a narrative shift towards self-sustainability. When analysts are this divided on a company that just turned profitable, retail investors have a window of opportunity. But here's the thing. None of this matters if the product can't compete technologically. And this is where NIO's physical moat comes into play. Competitors can copy software overnight, they can hire away engineers, they can reverse engineer battery chemistry, but they cannot software update a physical grid connection in a rural county. They can't overnight a mechanic in a van to build charging infrastructure across an entire nation. NIO's battery swapping network is no longer a money pit. It's a defensible competitive barrier. By decoupling the battery from the car, they've solved what I call the dead weight problem. Think about it. If you own a 150 kilowatt-hour battery, you're paying for that capacity 365 days a year, but you probably only use it fully a handful of times during road trips. The rest of the time, it's dead weight adding cost to your vehicle and degrading with every charge cycle. NIO S solution, standard battery with flexible rental options. You swap batteries in 3 minutes at over 1,000 highway stations. During the 2026 Spring Festival stress test, 93% of swaps were instant. Compare that to the charging pyramid. Legacy EV owners are stuck in what I call the NPC experience, waiting 90 minutes or more. Tesla and Huawei owners wait 30 to 60 minutes with high-speed charging, but still face holiday bottlenecks. NIO Elite users, 3 minutes, and they're back on the road. This isn't just convenience, it's a revenue-generating flywheel. NIO has pioneered energy as a service. Their infrastructure lead builds brand equity and reliability, which gives them pricing power. That pricing power means they can avoid the brutal price wars killing other manufacturers. Those margins get reinvested back into the grid, making the moat even deeper. It's a self-reinforcing cycle that gets stronger with scale. And speaking of scale, NIO just hit rank number 30 on the Corporate Knights Global 100. This is significant. They're what I call a mammal company, zero legacy drag. Unlike the dinosaurs like Volkswagen or Ford, who are being dragged down by internal combustion engine inertia, every dollar NIO earns is accretive green revenue. They're not fighting against their own past. They're building the future from scratch. Now, if you want to know where a stock is really going, follow the smart money. Institutions now hold 48.55% of NIO. These aren't retail day traders chasing momentum. Aspects Management just opened a massive new position of over 266 million shares. WT Asset Management holds 142 million shares. Gasalo Capital has a $91.4 million value position. These are sophisticated players betting on the underlying business engine, not short-term price movements. Let's look at the technical setup because this is where things get explosive. NIO is currently testing resistance at 491, with strong support at the 200-day exponential moving average around $5.28. Trading volume is 148% above average at 120.4 million shares. Here's the kicker. Short volume is sitting at 40 to 45% daily. With the Firefly ramp-up serving as a catalyst and profitability now established, a break above that 4.91 resistance could trigger a massive short squeeze. When shorts are forced to cover, we could see repricing toward $10 or even higher. Like always, this analysis is for informational and educational purposes only and should not be considered financial advice. Stock investments carry risk, including the potential loss of principal. Always conduct your own research and consult with a qualified financial advisor before making investment decisions. Past performance does not guarantee future results. So what's the bottom line? The strategic pivot has been executed. NIO has successfully transitioned from niche luxury to industrial scale through Firefly. The profit is secured. They've established a $100 million quarterly floor in non-GAAP earnings, demonstrating scalable unit economics. The infrastructure moat is defended. Their extensive battery swap and charging network creates massive barriers to entry that competitors simply cannot replicate overnight. NIO is no longer a fragile startup burning cash to survive. It's a maturing industry leader with a clear path to mass market dominance. If management continues executing at this level, we could be looking at triple-digit return potential from current prices. Now, here's my question for you. Are you betting on NIO's comeback story, or are you sitting this one out? Drop your thoughts in the comments below. I want to know if you're bullish, bearish, or just watching from the sidelines. And if you found this deep dive valuable, do me a favor, smash that like button to help this analysis reach more investors who need to see it. Finally, if you're serious about following smart money moves and finding hidden opportunities before they explode, hit that subscribe button and turn on notifications. I'm breaking down game-changing stocks like this every single day, and trust me, you don't want to miss what's coming next.